Good morning, ladies and gentlemen. This is USA Trading Frank, pre-market report for October 25th, 2016. This will be a short 20-minute pre-market video report, and I'd like to cover as many things as possible before market begins. So first of all, let's take a quick look at the market. As you all know, my service offers a very detailed and accurate and precise, tactical is the key word, roadmap in the form of charts that are provided for the benefit of all members, traders, and free trial subscribers to navigate these extremely volatile markets and hopefully profit from. Let's take a look at the S&P 500 right behind us, because that's pretty much what's the 800-pound gorilla in the market that controls the market, the SPX. And this is what we see it on the daily basis. Now, the daily charts are obviously not that relevant for active, fast traders on an intraday basis where volatility is immense, thanks to the Algo HFT, that's algorithmic high-frequency trading programs, the black boxes that control the market on a daily basis. However, it gives us a insight into what is going on, as in from a perspective of how the market patterns are looking on a swing on a swing basis or on a short-term or intermediate basis. We all know that by now. So saying all that, the SPX right now is looking exactly like this. This is not the first time you've seen this chart, but I'm showing this to you again, explaining that we have the 100-day moving average, we have the 34-day SMA, simple moving average, and then this red line is the 50 moving average. Okay, we had a reversal candle on Friday, this particular one, and going back, let me rewind back a little bit. This large drop, as we all know, was Brexit, big mover. We played it on a staggered basis, and we did very well with it. Then came the drop in early September with what I call the rate exit fears, that rates were going to, there was a lot of fear in the markets that the Fed was going to raise rates rather quickly, and that hammered emerging markets, and we had this big drop. So what we're seeing right now here is a attempt by the market in the form of large, these are pretty large reversal candles, hammer reversals, and we see that quite a few of them. The most prominent one was obviously on Thursday the 13th of October, and then again on Friday the 21st, where I alerted members to add to long positions, specifically on the index side, on the SPX and RUT calls, which paid very handsomely, as we all know, in the form of approximately 100 to 150%, depending on where you got in, of these lows on Friday. So here we are, retesting the 34-day SMA, and you have the 50-day SMA here. The 50-day SMA generally acts as a magnet, and you've seen that every single time. And it's also known as a mean reversion, where you deviate the standard deviation from the moving averages, which, as I've explained many times before, is like the highways that the market likes to travel in. So when we deviate too much, that in technical terms, the standard deviation from this point to down here obviously got pretty extreme. Same thing that happened here. So what generally happens, and when I say extreme, I'm talking about probably a standard deviation of -4, probably about -4 or so. Here, when we cracked, we had a standard deviation of almost -6, of -7. So I would say this was -4, as in the distance traveled away from the moving averages on the downside from this level down to here. That was roughly a 3% downside move on the market. Saying all that, the 50-day moving average, as I was saying before, does act as a magnet, and that's roughly around 2160. Now, the my trend lines and the structure and the way I transpose my own feelings over the market in the form of trend lines. This is a consolidation triangle, and once you get into retesting the 50-day moving average around 2160, you're back inside the triangle. So getting my favorite drawing tool out here, what we can see, okay, what we can see here that this should act as a magnet over the short term. If we manage to get out, and if we get into this consolidation triangle, talking about this one here, right? This consolidation triangle. This is the uptrend line going back from the Brexit lows down to the reversal lows on October 13th. Once we get into it, and if the market does attempt to break out, the next level of resistance obviously comes in at two different levels. You have the Bollinger Bands here at around 2175 or so, and then you got this upper gap fill right here, which comes in roughly around 2180. Okay, so and then you have an acceleration band, and that's basically what it means, like an acceleration band on a big rush. You can go back and hit the all-time highs, which was around the 2190 plus, or I believe the all-time highs on the SPX, looking at now the screen, was 2193.81. So let's look to see what this pattern looks like. For the bulls, this pattern looks like a dragon bullish formation. You can see that very clearly as I'm drawing this out. So a dragon bullish formation. On the way, there are multiple resistances. You have we are retesting the 34. Hopefully we hold that. If not, then we're going to retest. If we go over that, we are going to complete this pattern here, and that should be the 50 moving average, as I explained to you, and this would pan out as a pattern completion at around the 2175 to 2180 level. Okay, at that point, the market is going to hit some heavy resistance, because we can clearly see that was the supply zone or the big breakdown point, as we saw that, and I wouldn't be surprised, who knows, that we basically again pull back. And if it's something that the market does want to go higher after the elections, which is obviously a big pothole, because right before the elections, and depending on our next president, the markets will react rather violently. There's going to be heavy volatility. Wall Street in general favors the Clinton, Hillary Clinton, and if Trump does win, then obviously the market will initially have a fast, furious 4% type of correction on Dow Jones, or yep, I don't know. The percentage could be 5%. I don't know. Or 4 or 5% on the S&P 500, and then rise. Whoever wins, at once the market does its pullback, its obligatory pullback, you should expect to see a rise as we get into the latter part of November and the early part of December. So saying all that, once we get up here, from a bullish standpoint, you need a consolidation channel. So if you treat this as a cup, then you have a cup and handle, a consolidation, which should hold this particular uptrend line at around the 2130 level or so, or on an extreme basis, we should hold the 2112, 2118. Because if we don't hold these lines here, then obviously we have quite a bit of a free fall, and I wouldn't be surprised markets to test all these levels here, which I've explained in previous videocasts, at 2070, and then of course you have the Brexit lows at 1990, which in my opinion would be a absolutely fantastic aggressive buy zone. But then of course, if traders are not prepared for the break below the 2110 or 2100, let's call it the 2112 level, then it'll be extremely painful, because these are going to be fast and furious moves, and will not last days and days, but will execute themselves over a 24 to 48 hour period. So this is where we stand with S&P right now. Getting these out here, you can clearly see this is the dragon bullish formation I'm talking about. We have bearish trend lines here. The crossover, the negative crossover of the 34 below the 50, as you saw here, okay, is acting as a major resistance. So a blast up towards the 50 moving average, in my opinion, will also cause some heavy selling, because the 50-day moving average, the retest of the 50-day moving average, will bring out sellers who bought at the lows around here, and tactical buyers like us who bought the lows, and obviously we're going to see how the market reacts at that 50 mark at around the 2160, possibly the upper um, arm of the symmetrical triangle, and that would be around the 2165 level. So these are really extremely important points, because the reality is that the markets are completely run by machines, and what the SPX does matter a lot as to what is how many stocks react. Of course, different sectors react different way. So this crossover is from a perspective of a swing trader, is a negative, and unless we start to see a stabilization of the 50 and the 34-day moving average, and possibly a flattening and then again a move up, we are going to constantly keep on selling any tactical rallies which hit these zones, period. Because unless you have a crossover like this, let's say, where the 34 crossed over the 50, you are going to see resistance. Now, saying all that, on a daily basis, you can constantly see what we do, what I try to do and successfully do in majority of the cases, is tactical SPX and RUT trades, which are traded using the Thinkorswim platform and the Quad Algo HFT platform, which has served me extremely well. So saying all that, let's take a look at Thinkorswim. Now, before I go further, wouldn't suggest to anyone, I wouldn't suggest to anyone, in my humble opinion, to trade SPX and RUT calls and puts unless you're constantly monitoring the futures market in the form of the ES for the SPX and in form of the TF for the Russell 2000, which includes the IW, which the subset ETF is the IWM, and for the ES, basic stuff, is the SPY. I wouldn't suggest anyone trade these things unless you really are monitoring them, and more importantly, you understand what you're doing. Because these are complex patterns when you look at them on a shorter term basis. Each of these candles worth a lot of money. Yesterday alone, they were 50, 60, 70, 100% type of gains on these tactical trades. So I can't stress enough, as I always do, that unless you're monitoring the futures charts and trading these things, because these trades could last as little as 5 minutes sometimes. Okay, when you get a move like this, when you get these sharp candle moves, your calls that let's say you bought them, the same day expiry or 2-day expiry, because now it's Monday, Wednesdays, and Fridays. They'll move from $3 or $2 to $4 within minutes. So don't expect me, because it's not physically possible, to alert you exactly when the sell point is, but I show it on the charts and I explain it enough. So, you guys do what you need to do. But honestly speaking, speed is of essence. All right? Speed is of essence. And unless you really understand the dynamics of how these things are moving, these are not straight line up or down. Look at Monday. Okay, yesterday was Monday. So this is Monday till the close. Let's do this. And I know I'm stating the obvious, but it's important for people to realize that. So here's your intraday chart on a 15-minute basis. Let's remove all the lines. Let's hide all the lines, or let's remove all the lines, okay? And what do you see? You see this Of course, in hindsight, you see a smooth pattern, but while it's happening, it's a battle zone. So here we are. Monday started off, this was futures pre-market. Monday started off, it's around 9:30 around here. Big burp, sharp drop, little move up, sharp drop. Look at this. I'm just showing it to you all. So, okay. So when you look at this pattern here, okay, this pattern that I just drew, this is what the algos look at. All right. You tell me that if you're not really watching this carefully, if you're not managing your own trades, how you gonna do these trades? And that's the reason why it's so critical to have the strategic tools at hand. And that's your think or swim. Okay, switch between the 15-minute, the 1 hour, the overbought, oversold stochastics, all that stuff. And most importantly, the quad algo HFT system. And mind you, I don't want to be full disclaimer. I have no relationship with quad. I've been a user of quad for more than 10 years plus. All right. And I pay them every month, just like anyone else does, and I've developed a relationship with them in the sense that they've helped me understand how these charts work and stuff like that. But most importantly, if anyone's interested, go talk to them. I'll send the link. You can talk directly to the top guy at Quad and take it from there. Okay, he's given a very heavy discounted rate. I pay more than 400 bucks a month for a very comprehensive package. And again, this is not a trading platform per se. You can't put trades through Quad. It's basically a very comprehensive suite of stuff, but it's not a discount brokerage like TD Ameritrade or TOS or Scottrade or anything like that. And that's it. And so he's giving discount rate of about $120 a month, and I think everyone should try it out. And not just try it out. I have instructional videos. I've spent time and energy putting these together for everyone to see. And if people do subscribe to it, I can send a specific tutorial on how to set up the charts. Everything is there because they really save money. Most importantly, they make money. I mean, I have traders who use Quad who are not actively involved in the chat room, and they're making money. I'm not saying they're trading every day. Sometimes they trade maybe twice a week or 3 times a week. But anyway, coming down to it, you know what I'm saying. Coming down to it, when you look at this type of volatility moves, right, you better make sure that you know what you're doing. So don't go there, again, it's my suggestion, lump in with 20 contracts, and then within seconds, you're down 50%, So you got to do what you have to do. I like to do smaller pieces, take profits quickly, enter if I start to see a pattern developing or this type of downside pattern developing, which I alert very, based on the candles, based on my quad signals. These are big money. These could be good for 80% or 100% within a matter of an hour, if not less. I see a pattern developing on the move up on a reversal candle like we saw here at around 12:30. Then those are the ones that you can hold on for more than 15 minutes, 20 minutes, 30 minutes, and ride it till the end of the day. So bottom line is, you look at this zigzag pattern that I just drew over these candles. You know exactly what I'm talking about. So it's not rocket science. It's being done every day, but you need to have the right strategic tools, period. Now, let's take a look at, I only have 2 minutes left here. Let's take a look at an earnings play. In very simple terms, if you're gambling a lot of money on options, out of the money especially, on earnings, on any momentum stock, or any stock for that matter, get ready to lose money, which is a high probability trade. Earnings are a gamble. They're a toss-up. You get great earnings like Visa did, and the stock's down. It's down minimal, but still 77 cents, okay? Less than 1%. Could turn around and go higher. This is Rambus, for example. So what I do is I'll go ahead and buy a small amount of common, and then depending on the candle structure after hours, PayPal was a prime example, went down, bought a little bit more, added more on the run up. So Rambus was another one. You could basically, it had a ramp up, it pulled back a little bit, this is 430, and then it just kept on going. And right now it's $13, and adding those common on right after earnings and pre-earnings. It was one of the ER plays, paying the bills. So be careful of the common. I mean, be careful of playing heavy duty options, especially out